Welcome back to the Global Business Report here on Arise News. For the 6-month period from January to June 2023, Nigeria's Federal Inland Revenue Service, FIRS, says it brought in 5.5 trillion naira. There's the tweets right there. It says FIRS rakes in a record 5.5 trillion in 6 months, announcing that total revenue collection, of course, was for the half-year period, January through June of 2023, the highest tax revenue collection ever recorded by the service in any first 6 months of a fiscal year. Nigeria's foreign reserves, though, falling to $33.9 billion, lowest level in 2 years, according to data from the Central Bank of Nigeria. Going to get into that as well. And FBNH, let's take a look at their earnings for the second quarter. One of the biggest banks, of course, in Nigeria, FBN Holdings PLC, releasing its results unaudited, of course. $125 billion there as far as dollars. Naira, 56.5% growth. Joshua Odebisi is with us. He is, of course, senior research analyst with Rand Merchant Bank Nigeria. Joshua, it would have been nice if it was $125 billion, but what do you make of the results from FBNH? And you're welcome.
Thank you. Well, maybe one day.
Yeah, I know, right?
Well, what I'll say is that it's quite impressive. Obviously, they're doing well over 200% increase in profits. But if you look at the performance, pretty much their core banking, that's their interest income, came in line with expectations, but the non-interest revenue surprised significantly to the upside.
Yeah. Any clue on if they benefited from FX revaluation gains?
Well, from what I gathered from the investor relations people, they said that the bulk of that gain came from derivatives, and so I would assume that maybe they had some swaps with the federal government. If they did, then that would have a significant impact and would also explain a couple of other things.
Okay.
So, yeah, it's possible.
Yeah, it is. I have to ask you about a particular item on the balance sheet, the deposits with the central bank to the tune of about 1.7 trillion naira. Is that the fabled CRR? Or what are we looking at here as far as this figure?
Well, so what we have to remember is that because of the way the FBN reports their results, that figure might actually include a lot of money with central banks outside of Nigeria, right? Okay. Because when you actually compare it to the actual Naira deposits, you see that they have a total, the CRR, assume CRR is about 25.6%. Yeah. But of course, we know that the CRR is much higher than that, and effective CRR for quite a while has been significantly higher. Of course, this new CBN regime has come in and have said that they're probably going to change that approach. So maybe they have gone back to what is stipulated CRR at 32.5%. But I think that 1.7 trillion, as high as it may be, is not a true reflection of what is held by the Central Bank of Nigeria. Gotcha.
Now, speaking of CRR, I want to take you up on that point as far as the new regime and what could happen next week. Money supply, 63.4 trillion, record high as far as Nigeria is concerned. And then we had, of course, the decision that was made, Federal Executive Council and so on, about only distributing about 900 and something billion out of the 1.9 trillion for FAC that came in. The understanding is that they didn't want to pump too much funds into more funds into the money supply. With that being said, what does that, if the fiscal side is worried about the amount of money supply in circulation, what does that mean for CRR, the decision at the MPC next week?
Well, as it pertains to CRR, obviously we saw that they reduced the CRR for merchant banks.
Yes.
But the truth is that merchant banks as a whole, the total deposits that they hold accounts for less than 1% of the total money. So that actually has very little effect. I think that's why they were able to do that quite quickly. Yeah. It would be a lot more challenging at this very moment in time to do the same thing for the traditional DMBs. Yeah. Because if they did that, yes, there would be a massive jump in the amount of money within the system. So I think that they will probably be a little bit more cautious on that front. The best thing they can do is just stick to the effective rate as it is now, rather than doing what has been done in the past, which is pretty much discretionary CRR, which was closer to 40%. So if they bring it down to the actual rate, that's already giving the banks a lot more leeway and a lot more room to play with.
Okay, while also not having to flush the entire market with funds. Okay, that's so FBN and cash reserve ratio. And now UBA, I want to ask you about. Got hands on a road show that it looks like they're going on for July. Well, I guess what do you make of the bank's metrics and I guess the current environment to be raising debt or equity for them?
Well, what I would say is, just before I came, I actually was taking a look at some of the trading figures, and I think UBA is one of the banks that's currently limit up in the market. So that means there's heavy demand for their stocks in the market, and that's pretty much the same for almost all the banks, except maybe one or two. But what that means is that there is demand in the equity space. At the same time, if you look in the debt markets, you say that interest rates are not particularly favorable at this moment. So I think it would make a lot more sense from their perspective, since there's so much demand for their stocks. If they were to raise any kind of capital for any reason, it would make sense to go to the equity market, I think. But at the same time, if you look at UBA's performance from Q1 and expected performance in Q2 with all the possible revaluation gains, I would say that they're in a very strong position in terms of profitability and just returning money to investors. So it would make sense.
And also the Pan-African footprint is also a strength as well for them, yeah,
absolutely. So obviously UBA at this moment are the number one bank in terms of getting a lion's share of their profits from outside of Nigeria, right? So that is obviously a strength in times of economic hardship, especially in one country. So it sort of reduces your risk by spreading it across multiple regions. So on that front, they've always been quite solid. The only little issue or little hiccup, I'd say, is maybe not returning as much as their peers like Zenith and GT to investors in terms of dividend payouts. But other than that, they're quite strong.
Speaking of which, I guess we can now run through some of the other tier one banks, because we saw, we're looking at UBA's stock returns as of yesterday. They're all in double digits. So, I mean, taking the gamut of the tier one performers, well, what's that environment looking like now? Because, let's see. So FBNH, they're up 59. I think Zenith is up 88% or so on and so forth. So what's your read for tier one, this space?
For tier one space, I'd say for the rest of this year, you can expect the trajectory to be positive. Now, obviously, in the middle of all of that, there will be some moments of profit taking, because anybody who entered before this entire thing started will be looking at serious returns by now. So if they want to exit for whatever reason and take profits, they will be well inclined to do that, or have a lot of scope to do that and still be able to re-enter, because I think that this momentum is probably going to continue because of the fact that there's going to be such a positive upside for the banks and their performances.
Okay, what about headwinds? What about the headwinds? The headwinds that we've always talked about on the show for the banking sector, if you can run through them, are they still there?
Yeah, okay. So one of the major headwinds right now we're looking at is the fact that obviously within the current environment, chances are that interest rates are going to remain elevated, but not as high as they probably need to be in order to combat inflation effectively. And what that means is that you're probably going to see an effect on non-performing loans and on the bank's impairments, simply due to the fact that when the interest rate is 18% and inflation is as high as it is, probably there will still be a bit of upward pressure on loans. And I think we've seen that with FBN. They reported something like a 56% expansion in their loan book just year to date. That means that there's still quite a significant demand for debt. And unless there is a much higher increase in the NPR, we'll probably not see that pressure subside immediately, and that will put pressure on their NPLs and on their impairments in their books, as we've seen already. I think they reported that the NPLs went up from about 4% to 4.3%. So we've already started to see some of those effects, and I think that will be reflected across most of, if not all, the tier one banks.
Thank you for the rundown of the banks. Real quick, what do you make of the reserves falling to 3.9 billion for FX reserves for the nation? I mean, if we've liberalized the exchange rates, does perhaps the CBN not have to defend the currency as would in the past? I know we still have a managed float. What do you make of this development?
Well, so yeah, you mentioned that it's a managed float. I mean, if it's a managed float, we've seen some pretty wild fluctuations and some pretty concerning numbers just in the last couple of weeks. So I'd say that maybe they're not managing it as strictly as they have been in the past. And at the same time, whatever positive effect you would expect to see with regards to accruals to the FX reserves, I think that would take a little bit of time. Obviously, they have removed subsidy on petrol, and that was a massive pressure point. And I think that will just take a little bit of time to reflect. Plus, we have to remember that this is a moving average. So even if there are accruals in the next couple of weeks or months, it will take a lot of time for that to be reflected in the FX reserve figure.
Yeah, great stuff. Joshua Odebisi, Senior Research Analyst over with Rand Merchant Bank Nigeria. Always a pleasure having you talk banking. Thank you so much for joining us.